The dot-com bubble and the new artificial intelligence bubble? The internet was the biggest technological revolution of the late 20th century. With it came promises of endless wealth, billion-dollar companies, and an era of unstoppable economic growth. Or at least, that's what they said. But amidst all the euphoria, one man went against the tide. Warren Buffett wrote an article warning that the market wouldn't deliver the spectacular returns many were expecting. At the time, investors were confident in annual gains of over 12%, but Buffett predicted something very different. Just 6% per year at best. And if he was wrong, it would likely be lower. Few listened, but less than a year later, the dot-com bubble burst. The market plummeted, major companies collapsed, and investors lost billions. Now, more than 20 years later, history seems to be repeating itself, this time with a new craze: artificial intelligence. Are we in another bubble? Block 1. The dot-com bubble and Buffett's prediction. In the 90s, any company linked to the internet was seen as a guaranteed investment. Simply adding .com to your company name could send its stock price soaring. But Buffett saw something others didn't. He understood that when investors get caught up in euphoria, they ignore fundamental risks. And that's exactly what happened. Within months, it all came crashing down. The market lost nearly 50% of its value, and those 12% annual growth predictions turned into a much harsher reality, just 2.77% per year over the next 17 years. Block 2. Companies that collapsed. The dot-com crash didn't just hurt investors. Some companies simply vanished. Pets.com, rapid growth but no profits. Burned through millions and collapsed. Webvan expanded aggressively without demand, leading to massive losses. BOO.com spent $135 million in just 18 months and went bankrupt. WorldCom and Global Crossing, telecom giants that committed fraud and crumbled. Even tech giants once paid. Cisco Systems lost 80% of its market value. Amazon, its stock price dropped from $430 to just $30 after the crash. A few companies managed to recover, but most disappeared. And the worst part? Many believed this bubble would never burst. Block 3. The new bubble, artificial intelligence? Now, more than 20 years later, we are seeing a new phenomenon, artificial intelligence. Are we witnessing another bubble? The excitement is huge, but are we ignoring the risks? Block 4. The 4 signs of a bubble according to Howard Marks. Investor Howard Marks identified 4 key signs of a market bubble. 1. Extreme irrationality. Investors believe prices will only go up. 2. Blind adoration. Companies are seen as untouchable. 3. Belief in infallibility. Everyone thinks this technology is different. 4. Fear of missing out, FOMO. People buy stocks just to avoid being left behind. Sound familiar? These same signs were. Conclusion: are we in a new bubble? Buffett saw what no one wanted to see in 1999. Now, the question is, are we about to experience another crash? Is the AI market inflated just like the dot-com bubble? Let us know what you think in the comments. Do you believe we are in a bubble, or is AI truly a game changer? And if you enjoyed this video, don't forget to subscribe and hit the notification bell for more content like this.